The FD, absolutely, the conversation is about making his or her life easier and giving them something that they've not seen before, because many don't know that these sorts of systems exist.
Welcome to the InsTech London podcast. This is Matthew Grant, and in this episode I'm back at Lloyd in the lab, this time talking to Stuart Conibear and Ian Jones from Phinsys. Now, Phinsys is one of the companies in the third cohort at the Lloyd's lab. They started in 2010, and they're bringing together some of the key financial information that helps insurers get better and faster insights into performance. The most recent cohort at Lloyd's brings together more established companies this time than the prior ones. It's scale-ups rather than startups. And their goal is to tackle some of the key areas that are going to be identified in the future of Lloyd's paper released at the end of September. And efficiency is very much one of those areas. The InsTech London podcasts are being supported by Insurance Insider this month. And the Insider helps us keep up to the minute with breaking news and insights into the global specialty and reinsurance market, and actually the new technology they're using as well. You can download a free copy of Insurance Insider from the episode notes with this podcast. Welcome to the InsTech London podcast. We're back in one of my favourite places to do podcasts, the padded cell in the Lloyd's lab. You're 2 weeks into your Lloyd's lab experience. Is it a bit like going back to school when you're making new friends and finding out what everyone's been up to in the first couple of weeks?
We've met far too many people. I've forgotten half of them already. We've a few foreign companies on the cohort which are easier to remember, and it's a huge number of people to add to my LinkedIn profile.
Stuart, let's talk a little bit about Phinsys and what you do. You've got 27 employees now. You're focusing around financial accounting, and regulatory reporting and analytical needs. Could you just talk a little bit about what that means in practice, and maybe a word about some of the clients you're working with?
Richard had this vision, really. He'd spent many years inside Ace and Chubb building similar systems. We look to kind of automate everything from front-end systems being policy and claim systems through down to the general ledger. And really what we're trying to do is remove the spreadsheets, the kind of small IT solutions that are holding data siloed and lots and lots of manual processes. We see ourselves quite niche. There's no one really doing what we do, certainly in the UK and the London market.
Well, you've got a pretty impressive list of clients, both what you've got on your website, Atrium, MS Amlin, Star, CNA Hardy, XL Catlin, N-Star. I think you've got a few more in there. So clearly you're doing something right. You've moved beyond the POC. But for those of us that are not deep into financial accounting and how it works in the insurance world, could you give some specifics around what your solutions are doing that other people can't do, and how you're working with the whole back end and front end of your client systems? We
look at it on a product basis. So rather than building bespoke solutions for each client, we felt that we could design enough of a product that meant that each time we go into one of these customers, 80% of the work is already there, and we can spend the rest of the time focusing on what makes them unique, what policy admin systems they have, whether that's a London market system like Eclipse, or something more international flavour like a Duck Creek or a Guidewire. Through configuration, then, we can conform all of that data. Many of them have many different disparate underwriting and claim systems, and we're pulling all of that information into what we consider a finance data warehouse. So something architected specifically for the FD and actuarial teams to give them what they need to look at the financial health of the business, to respond to statutory and regulatory requirements, and give management insight about how the business is being run.
So we tend to think about the way insurers are looking at using technology, whether new or existing. First of all, make themselves more efficient. Secondly, enhance the data they've got or the analytics they've got by tapping into new sources of data. Or thirdly, enable new insurance products. It sounds like the first one is your sweet spot, which is making business more efficient. What about the other two? Are you helping your clients tap into new sources of data, and are you helping them be able to underwrite new products?
Absolutely, we're an efficiency play. We're all about doing things faster, more accurately, with less people. In terms of the insights that data gives them, it's all sitting in one place. They have probably a far more granular view of the way that the business is operating, which lines are performing well or not, and the financial metrics that often aren't available when they're just purely looking at the kind of underwriting and claims, key performance indicators that most companies will have nowadays.
And who is it in the client that brings you in? Who's your typical point of contact when you're selling something?
The FD, absolutely. The conversation is about making his or her life easier and giving them something that they've not seen before, because many don't know that these sorts of systems exist.
I think the only other thing I would add about CFOs and FDs is that there's been quite a lot of research. EY, most notably, did a big survey on insurance CFOs, and CFOs are taking on a much more strategic role inside the business now. I think it was 48% of CFOs said that they wanted faster, more relevant, more integrated financial analysis. So I think it's not just about number crunching now. It's about understanding what's going on inside your business, so that you can make informed decisions about what you do in the future.
That's a great business model if the buyer of your product is also the person that happens to have their hands on the company budget. Just on the challenges of legacy systems, and as we all know, insurers get a lot of stick, maybe unfairly, for the pace of change. Do you find you tend to get brought in to work on projects alongside existing systems, or other companies that are actually looking at replacing all of what they're doing on their financial accounting and bringing you in to do that?
Historically, they just simply wouldn't have a system for areas that we're looking to address. They will be reliant on literally dozens of spreadsheets potentially to solve some of these challenges. More recently, even the larger insurers that have something of a backbone of finance processing systems, new regulations such as IFRS 17 is meaning that they're having to rip up a lot of what they've done in the past. There's some huge budgets. I know SCORE recently released down in the Rendezvous that they've got a budget of 100 million set aside for IFRS 17.
I think we just lost half our listeners, Stuart, as they rush off to email SCORE to try and arrange a meeting to tap into that 100 million budget. So I want to come back a little bit to the accelerators or incubators, or however you choose to characterize them, that you've been working on. So you mentioned PwC. We'll come on to Lloyd's lab in a minute, but be interested to just understand the sort of motivation for a company that's got a very strong set of clients. You mentioned earlier before that you've got pretty strong inbound inquiries. Why would you then go and spend time working in a incubator, which have historically been more geared around helping early stage companies with some of the real basics about what it is to talk to insurers and how to build a business? Isn't that a little bit sort of elementary school for you, given where you are in your own evolution?
The way we felt to really grow was to find partnerships. And I spoke to all of the big players, KPMG, EY, Accenture. PwC was the one that kind of showed us the most love, and had already put together a program specifically for scale-ups. We ended up coming out of that signing a joint business relationship. I think we were the only ones so far on that cohort to do that.
I'd just like to talk a bit about Lloyd's now. So on your website, you talk about working with risk exchanges and the Syndicate in a box initiative. For those that don't know what those mean, it'd be good just to get a little bit of a description of the two of them.
This is really very much about the future at Lloyd's. John Neal specifically has said he wants to see a 50% reduction in expense ratios over the next 5 years. And the future at Lloyd's has set its stall out to deliver efficiencies in the market. And we see ourselves as very much involved in that, as being part of the third cohort in the Lloyd's lab, which is very much focused on sort of mid and back office, and trying to transform the way that the market operates. The Syndicate in a Box is an exciting initiative that promises to transform, the way underwriting is done at Lloyd's, particularly for smaller businesses. And the success of the Syndicate in the box is that has to have a level of automation embedded within it to keep those costs down and to make that model successful.
So the risk exchange, there's two flavours to that. The kind of more simplistic class of business where that pricing can be driven by algorithms, where there should be little or no human interaction. The complex risk exchange, which will probably be the next generation of PPL, where more sophisticated class of business, there'll still be the interaction between broker, insured and carrier, those portals, and the corporation in terms of how financial information will flow through the corporation and to all of the individuals. Same on the Syndicate in a box side. It's an exciting way for the market to open itself up to either MGAs that then want to take some capacity and prove themselves, either new classes or products that want to have that opportunity to try their business plans, or even established players that want to launch a new legal entity to bring some capacity into a fast track system where they hope to go through all the due diligence in 3 months rather than 12. So a much easier way, almost like a sandbox environment, to bring new capital and product ideas into the market.
There's a suggestion that there will be more limited reporting requirements. That's what Lloyds have said. But it'll be interesting to see what what the impact of that is, because finance teams, in terms of regulatory reporting, that's probably the biggest pressure they face.
A couple of interesting points there. These Syndicate in a box, and that point about where we are now in the Lloyd's building, people may be a bit uncomfortable about others coming in and competing with their business. But I mean, that's the reality of practically all companies that successfully go through this period of disruption. It's self-disruption. It's actually creating opportunities for people to, compete and potentially cannibalize, but through that you actually get more efficiency. So it'll be interesting to see how agile Lloyd's is able to be, and how welcoming they really are to people that are actually competing with the core business. And then the risk exchange again is it's a really smart move, because if you go back 2 or 3 years, people were talking about technology is going to replace everybody and there no need to be underwriters, and the reality is, yes, there are some things that can be commoditized and should be in a simple, but actually in all areas of technology you find that many times you still need the human element in there, and you're increasingly seeing technology being used to be more efficient and help triage risks, but we're a long way from replacing the underwriter. I'm kind of interested to hear how easy or not perhaps it is to plug in to the Phinsys products. This whole theme about interoperability, and you talked earlier, Stuart, about some of the traditional heavy costs involved with system integrators. How are you solving that problem and making it more cost effective for people?
You'd like to think that the market and the systems in play here had lots of kind of APIs. They don't. The insurtechs and some of the first movers are thinking more about that. Lloyd's is doing a good job of making a lot of its common services API driven, with a strong backbone there for how people will plug into the market and retrieve and push data around. But we're much more traditional ETL, extract, transform, load, with more traditional technologies. It's proven. We're very good at it. And we can take data, I'm talking very large volumes of data, into our systems, process it, and push it down to where it needs to be very effectively. APIs will come, but again, until the managing agents and the larger insurers have got those sorts of things in place with their critical systems being their policy and claim systems, there's no point in us moving first on that.
We're creating a bridge between finance and actuarial teams as well, making sure that they're actually working from the same numbers. And I think there may be possibly some listeners who would recognise that that's not always been the case. People working with different types of spreadsheets, different ways of calculating numbers, and really what we're doing is instilling a discipline and a process around that to make sure that everything reconciles back to the same single source of truth.
Yeah, I have a sort of fantasy film in mind where spreadsheets take over the world, and they're a bit like the the classic cockroach after a nuclear apocalypse. That everything else is destroyed, but the spreadsheet still survives. So it's good to hear that somebody else, much as we love spreadsheets, there's only a limit to how far you can go with them. So let's come back to Lloyd's Lab. So I'm interested, what was the motivation for joining, and what does life look like now that you've found your desks and sharpened your pencils and kind of figured out how to deal with all the people that want to come and be your friend? So Stuart.
There was the typical Lloyd's 101 and orientation type meetings. We had a lightning pitch session with John Neal so he could get up to speed with who we were. We wouldn't get close to the people that mattered and the Lloyd's and McKinsey people driving this strategy if we weren't in the lab. And for us to validate what we are doing, which we wouldn't have the opportunity to do otherwise, we felt, if we didn't take the chance to pitch and get through that process.
One of the values that Lloyd's offers through the Lloyd's Lab is tapping into people working directly in the managing agents, the syndicates. Are you getting people coming and wanting to help you there as well?
Yeah, that's been great. I think all of the cohort have got at least 5 or 6 different mentors from the market. I've been really impressed with the seniority of those people as well. Finance directors, head of finance systems, people that are specific to the area that we operate in. There's a mixture of people that want to help transform the market. They're passionate about that future. They can see the opportunity that new technology will bring, and mentors that can see problems in their own organizations, and maybe we are saying the right things to help them operate as a business better. So selfishly for us, that's great. It's an opportunity to work with them, or the mentors that are just passionate about driving the market forward. They're opening their address books. They're introducing us to other people.
John Neal has come out and said that that he wants to make some quick wins in the market, and not just, I think, to make that whole initiative look good, but to actually start driving expenses down, which is a key objective. I mean, John Hancock, again, has said very recently that the 2020 business planning process is going to have a continued focus on expense reduction. So the challenge, I think, is to make sure that cohort 3 in the Lloyd's Lab really does actually start delivering tangible benefits.
Are you building up to a dramatic pitch day in a few weeks' time with live rock and roll and purple flashing lights?
We've got the dry ice on order. And mid-November, when it all comes to a head, we will have a demo day. We've got some ideas of what that will look like already, because 10 weeks will fly by. Yes, they want us to demo to an audience to show what we've achieved, but also to speak about what the future holds, because 10 weeks is very difficult. I know some of the old cohort, they are literally building out product to the point where they have a minimum viable. We have products, they're live, they're proven, but there's other things that we want to prove with those products. And if we get the opportunity to work on any of the future Lloyd's initiatives and do some integration or prove out a business model that will work, that would be really exciting for us.
Is there anything you see that will enable you or the industry to sort of change dramatically with regards to either efficiency or workflow or access to data?
A lot of the London market, the capital is coming from large US insurers, which don't care that everything is driven by bureau messaging and you need to wait for the last day of the month to start to close your books. They need solutions for that, and a daily financial close is something that starts to get spoken about now. That is something that the FD will be conscious of. They want up to the minute details about the performance of the business and the financial state of it, not the end of month plus X working days to close, gross, seeded, reserving, etc., which is the norm in the market at the moment.
I'd be interested to hear from both of you, when you look out there at all the people in this, whether it's insurtech or just regular tech, and if anybody can tell the difference, please write in and we'll give a prize to the best answer. Either who do you like the look of, or what characterises companies you think are actually succeeding in this space?
My daughter is deaf, and she's grown up now and very independent. But one of the biggest issues that she has, where she's still very dependent on her parents, is just the small matter of phone calls. She can't make phone calls, she can't receive phone calls, so visits to doctors, hospitals, banks, etc. are very difficult to arrange. And there's a startup based in Rome, actually, in Italy, called Pedius. They enable deaf people to make and receive phone calls without the need for third-party help. So I think, tech obviously has the capability to transform or make social changes and improvements, and that's one, as I say, is very close to home.
Well, thanks, Ian. We'll make sure we put Pedius link in the episode notes, as anybody can find that. Stuart, what about you?
The ones that seem to do well, I see people come in from other markets and talk about disruption and have a very clear business plan, but dumb down insurance and specifically the London market, and get into a lot of trouble by oversimplifying what they think they're looking at. They struggle, they pivot, they struggle a bit more and they pivot, and a lot of them exit. The people that take it seriously, that there are clever individuals in the insurance market that have been trying to crack this nut for a long time, realise the complexities. It isn't all as conformed as maybe the financial services and banking space, and it's all about networking and relationships, and that goes a long way with the technology as well. And partnerships and ecosystems of services is the way forward. Yeah,
it's definitely the reality. Although I've got to say, I do have a slight affection for the disruptors of 2016, and I still think there's some space for people to come in and albeit naively and maybe a little bit annoyingly, come and tell everybody what they're doing wrong. And I suspect, as you say, quite a lot will fall by the wayside. Now and again we'll see some ones that actually make a difference. So yeah, bring it on, disruptors. We might be rude about you, but we still need you. Stuart, you mentioned InsTech London in there. We're delighted to have you as a corporate member. You've been to a few of our events. We're kind of delighted that an organisation that's still in its early stage is spending money with us. You give up your Monday evening to go and hang out in a dark nightclub with 200 other people drinking wine. And what's that all about? What brings you along to our events?
So I've kind of done it on my own back previously. I know yourself and the other founders for many years, and we operate in a few different cities. London by far has the strongest community of insurtech firms, and it takes a lot of effort to build that community. New York, on paper, they've got more insurtech firms registered, but zero community, because no one like yourself and Paolo and Robin have taken the effort to try and do anything. There's some others where Hartford and one or two individuals are really plugging away to build that, and supporting that I think is very important. And whereas I've done it on my own and taken huge value from the presentations that you've put on and met some very interesting companies, joining as a corporate member allows me to invite others in the team that are interested in the networking and what they'll learn from listening to other people's ideas and business models. So yeah, we're thrilled to kind of have the opportunity to join and allow some of our team. It's knowledge sharing, and it's effectively training for them, because they will hear a lot of things that will impact the way that they work for us and new ideas that they'll bring to the table.
That about wraps it up. So if anybody wants to come and see you, presumably they can find you in the lab, but what's the best way to connect with either of you?
Yeah, LinkedIn. We'll be in the lab half the time probably. We'll be back on Fenchurch Street in our offices the other half, or wandering around the market.
Tremendous. Well, listen, I'll let you get back to that queue of people all desperate to see you, but thank you again, and really enjoyed getting some more insights into what's happening in the lab.
Thank you, Matthew.
Thanks, Matthew.
If you'd like to hear more about companies at the Lloyd Labs, you can hear my interview with the team at Describe Data, who talk about their experience in cohort 2 earlier this year. That's podcast number 40. And you can even go back earlier than that and hear me talking to Dickie Whitaker, CEO of Oasis Loss Modelling Framework. And Oasis is actually in cohort 3 alongside Phinsys, and that's podcast number 32. Now, if you're interested in what we're up to at InsTech London, you can find us at www.instech.london, and you'll see there records of our events for the last 2 years, write-ups on the companies we've met with, and you can register there for future events.